Michael and Cyril, welcome to the show.
Thank you
Thank
very
you for
much.
having us.
Yeah, it's a pleasure.
Yeah, super excited to have a chat today. Maybe we'll start with Michael first and then Cyril. Uh, for audience, who are you and what do you do in crypto?
Yes, so I'm Michael. I'm with Liquidity. That's a DeFi protocol I joined 4 years ago, now leading the company behind the Liquidity protocol. And if you're in DeFi, you probably know Maker. So Liquidity is something similar. It's a borrowing protocol where you can get out a loan against your Ether. And you can do that in the protocol's own stablecoin, Bold. So it has also its own stablecoin with which you can earn yield. So that's Liquidity. It's been around for almost 5 years. We have two versions of our protocol. Yeah, and I think in a nutshell, that's it, and we can go deeper. But just that people know where in the crypto DeFi space we are. We are totally on Ethereum, so kind of we are Ethereum believers. That's our ecosystem.
Nice. And for you, Cyril.
Yes, I'm contributor to Aladdin DAO, and Aladdin DAO is the DAO behind several protocols, including FXUSD protocol. And just as Michael said, if you're familiar with the Maker DAO model, FXUSD is a CDP. I like to call it an evolved CDP because it has different improvements to compare with the original Maker vision. And to make it simple, basically, it's zero interest leverage. So in most cases, you just pay a one-time fee instead of recurring borrowing costs. And we have a very innovative liquidation mechanism that prevents any hard liquidation by liquidating very progressively and keeping as much exposure as possible to the users. We also integrate a very efficient peg keeping mechanism. And in the same way as Liquidity, we're very Ethereum aligned, and we believe in decentralization, in the value of trustlessness. And we built actually FX protocol to provide an alternative to centralized solutions. I guess we share the same values. We just made different design choices. And that's because we share the similar values that we are here together tonight.
Yeah, that's the most important point. I forgot. I think these are our main roles, but why are we here together? There's like a second hat that we wear, and that's the Trustless Force is a new built community which exactly wants to align protocols, but contributors, users out there that are very Ethereum aligned. They believe in the trustless vision, sovereign solutions, and I think that's also one of the main reasons why we are here and why we are here together and why we are here also with the Nance community. Very excited because I think it's also an OG. It's nice to see how it works with decentralization. So I think it's really nice to get in touch. So we're not only here from Liquidity, but also from the Trustless Force, which is a community. We can talk more about that wants to bring together people that are really passionate about Ethereum and its values. And we discussed it yesterday already on a podcast, and often they are scattered and you meet them again and again. But I think at the end, these people are the heart and the substance and made Ethereum what it is today. And we just feel us as a protocol, but also as an ecosystem, we should value that more and it's like a small plant, really take care of it because otherwise it gets just kind of bulldozed by a lot of things, and then when you need it and when you want to pick up the flower, it isn't there anymore.
Super. So the two of you clearly have been in the space for quite some time. I guess the two of you are very much established and also experienced. You guys are essentially the OG DeFi dancers and have been around, and you know the dance inside and out, and which of course has led to the Trustless Force. So I'm really excited to talk about that in a bit. So, gentlemen, let's go ahead and start with stablecoins, right? And when we think about stablecoins, companies like USDT, USDC, they are the first that comes to mind. And it's always when we talk about a stablecoin is how do we assess its safety? Safety of the value, like what is it backed by? And at the higher levels, can I use this stablecoin that is compliant? So based on this, right, stablecoins have some level of, well, can I say maybe requirement, and therefore certain users. But there also poses threats to the crypto ecosystem as a whole, because we have heard stories of stablecoins being frozen by the central exchanges. So maybe I would like to hear it from the two of you. Maybe we'll start with Michael first, right? What do you think is the underlying problem of stablecoins in the market, and why is that a problem for everyone today?
Yeah, I wouldn't frame it as a problem, honestly, if I hear it like that. First, let's take a step back. Stablecoins are the killer use case right now for crypto and also for Ethereum. So I think they are a great product, and open up new possibilities that weren't possible. So I think that's great. And also USDC and USDT, very, very important. But I think my worldview is a bit about stablecoins. I see two extremes. You have the regulated ones, let's say USDT or Paxos, and now with the Genius Act, we will have all these stablecoins. They will be commoditized, and they're great. They give you the traditional security and all these measures, and they are very valid. And then I think we have on the other side, that's where more Cyril and I are coming from, is that you say we can build stablecoins with the values of Ethereum, truly digital dollars that are backed by crypto, that don't have intermediaries, that have just a different profile, and that also it's important to see that you have this option and that you have both options available. And I think rather than look into what are the advantages and the properties, because often these totally decentralized ones are not known, or everything is pulled in one bucket. And the important point is, I think the two extreme make a lot of sense to me. Either you say you trust code, you're out of regulation because code enforces stuff, you have no intermediaries, you have much more control of these stablecoins. And then you have the big bulk in the middle today. There are a lot of projects there, I'm not naming them, but every time you go one step a bit more inside, a bit more code or a bit more centralization and so on, actually you're just taking on risk. Nothing else. And hopefully you get rewarded for that. But I think they're kind of, it's really a gray area. And I think in the future, it will go into these two extremes. So I just wanted that to highlight that I think that's how the situation is. And that's why I wouldn't frame it as a problem. I would just say one needs to know a bit the disadvantages and advantages of the one side and also of the other side. And I can happy to dive into that, but I just wanted that maybe clarify that first.
I think the problem is not necessarily that they are centralized stablecoins, because I believe we need different kinds of stablecoins, and it's totally okay to have different kinds of stablecoins. But what's the problem is that, as you said, Neil, that it's hard to assess the risk of the different stablecoins. But most people don't even care about this. They don't even ask themselves, is there a risk behind this stablecoin I'm using? They're not even aware there are different kinds of stablecoins. And one of our mission with the Trustless Force is actually to bring awareness around the different stablecoins designs, risks, and just to make people a bit curious about how they could hedge their risk and how they could diversify their exposure, and potentially even get better benefits that the ones they get with the stables they're used to interact with.
And to break it down maybe a bit, to make it concrete for users, what is the difference and what are the risks? We call us Trustless Force, so it's a lot about trust and risk. So just that people maybe understand what's behind, I don't know, I just take Ethena. It's a big stable coin, so okay, you have a stable coin. They have assets on an exchange, or they hold even USDT. So you have the risk of USDT. There is some operation involved. It's not so clear whether it's regulated. Can you mint and redeem? You have all these questions, and they manage it very well, and it's a good product.
Until October, right?
Huh?
Until October.
Yeah. I mean, these things can happen, and I think they handle it okay, but you just need to be aware of it, that, okay, it can depeg, and I, as a normal user, can I redeem, or the big users can redeem before me because you need to do KYC. So that's the whole world. You have a lot of exposure to centralized players, to collateral that lies in traditional institution. You're not sure what is happening, what custody solution they use. Have they doing the carry trade right now? Or they investing treasuries? Or they in gold? You need to be very on your feet. So that's that world. And there you have these risks like counterparty risk, transparency risk, custodian risk, operational risk. You know, who's managing? There's a multi-sig somewhere. Who's managing that? You need to figure it out. And then you have maybe, something like liquidity or bold, which is totally on the opposite side, where we say it's the collateral is only on-chain ETH, staked ETH, or in FX case, wrapped Bitcoin. You have no counterparty risk because everything is on-chain. You have the full transparency. I have no more control and data than you have, Liew. So you have like built-in protection mechanism. You don't need regulation. So you have the transparency. You have the on-chain enforceability. Everybody can mint and redeem. Sorry, and then I wanted to say one more. Oh, and you have very strong property rights. You know, maybe that's one of the biggest reasons we have this unstoppable blockchain. Well, every stablecoin, 99% of the stablecoins are freezable on Ethereum. So I think we should have like our Ethereum dollars that just run and nobody messes with. So strong property rights means, okay, nobody can censor, can blacklist. I own my dollars and they are backed with my crypto. That's, shows you that not everything is a stablecoin and is worth $1, but to these dollars, different risks are attached and different properties. Yeah, a property can be frozen. Can I redeem the stablecoin, getting the value behind it, stuff like that. And I think then it's really a choice. Some say I'm totally fine with my banks; they're doing a great job. USDC or the Paxos dollar. Paxos is a great dollar. Honestly, I would rather have a Paxos stablecoin than my dollars in the bank. Do I trust them? Or do I say, hey, I really like that I have full control. I trust the code and the oracle that is involved. That is the risk I'm taking on that side. But I like the properties and the certainty that this stablecoin gives me. And it's not a black and white. And we will then talk about that. It's really the diversification. How much do I want from them? And then is it 99% that and 1% that, or maybe 20-80? It also depends a bit where you are and exactly what you as a user value. And I think that's an important conversation, also educational piece that we want to make users aware of, that they can make the choice and also make a bit the case. And we can talk about why people should hold such a stable coin, but also make a bit the case that we think we need these stable coins on Ethereum. It's great to have a trustless layer, but if you don't have the applications and not even our stable coin that just kind of is can run permissionless and in a sovereign way, then I just think we haven't done our duty.
And I really like this theme that you've brought up, right? We've got both the risk and the reward, but in order to understand the reward, we must first really deep dive into the risk. And I think, Michael, you explained it very well. There are a bunch of different risk types and classifications that we need to individually assess one by one, and then choosing the stable coin for us is really dependent on the risk appetite as well. Now, we've talked quite a bit of that. Let's dive into the reward here, because for me, I'm just a guy who, I think of a stable coin. I think all of stable coins are the same. I don't really look at treasuries a lot. What's backing what's backing the peg? But we'll talk about the peg in a bit, right? But I essentially want to understand what examples of sovereign stablecoin adoption and what are the examples that you're currently seeing now across the market that is providing a real incentive and reward to the users amidst all of this risk, of course. Maybe Cyril, you can take this one.
Yeah, I guess our stables are pretty good examples of stables that can deliver attractive yields and competitive yields, at least with, in my opinion, lower risk, because as Michael explained very well, everything is transparent and you don't need any third-party entity to build any kind of transparency dashboard, because transparency is here by design. You don't need to wait for anyone to make it to attest on anything. So you can monitor your risk. You can automate your strategies, monitoring your risk 100% of the time. So the risks are very contained and monitored. And regarding yield, I know the numbers for FX, and Michael, you can probably talk about both later. But for instance, on FX, just over the past year, over $7 million of organic yield. I mean, organic yield generated by the protocol. I'm not talking about token emissions, have been distributed to the stable strategy on the FX protocol. And it's just, sustainable. It goes with the protocol growth, and it doesn't rely on any T-bills, anything like that. It's just math on the blockchain executed by a code that you can audit anytime, basically.
Yeah, and it's not even, it's more than math, it's very straightforward. I call it peer-to-peer finance.
Yeah.
Because for example, in the case of liquidity, what we just do, somebody wants to borrow. In liquidity, they set their own rate, let's say 4%. What the protocol does, it takes, okay, Neil, you're paying 4% for your loan. It's holding the stablecoin, which you are using to buy a fancy car. So the 4% goes directly to Cyril. So it's, that's what I mean, low risk yield. So because the yield is coming from you, the protocol is giving there's not a fancy strategy. The protocol custodies your assets. It's not on a custodian, on exchange. It's not managed by somebody. It's very simple and clear. And I think that's an important message. It's not a trade-off. It's not just holding a stablecoin, but I think you can get comparable or good risk-adjusted yield to other stable coins by still having these properties.
Exactly.
And as soon as you then have a stable coin that has real world assets or maybe isn't regulated properly, then you're in this gray area. And I hope that you then get 50% or 100% more yield to be compensated for things, as you said, you are not interested, I just trust, let's pray. For all these things that can happen, and crazy things can happen. I looked recently at a 2 billion stable coin, I think the market cap, and it was just wild to see, okay, they shifted their custody solution, now it's dead. And then, okay, they had this strategy and this allocation. 6 months later, that was completely different. It's kind of like a big hedge fund. And if it's managed well, okay, great. But I just think, okay, it's a hedge fund that is not regulated. So you're taking just kind of the worst thing of both worlds. It's a hedge fund that's not regulated and doing that stuff. Then I rather have a stable coin that just is invested in treasuries, or a hedge fund that is properly regulated, but that in between, that probably you also then touch, Neil, if you just say, okay, the yield is nice. I think there you might think you get a good yield, but you don't feel the risk, or you don't see it. And as long as nothing happens, it's good. And if some things happen, like in Ethereum, one stablecoin going down and then even taking other yields down, so it's sometimes not only the protocol, but the mesh of protocol of stacking in DeFi that you need to be aware. And I think there we try also with the Trustless Force highlight protocols that try to minimize these dependencies and the trust that you need to place on these solutions. So you can have also a bit more peace of mind without needing to do all the due diligence.
And the idea is also to showcase that it's easy. You don't need to be like an expert in DeFi. You don't need to use complex protocols or strategies to actually use trustless solutions. The switch is very easy, and the idea is just to showcase it basically and make more people aware of this.
And to give you a concrete example,
you may have lost me. I get a notification saying my connection is crap.
I can hear you. But to give you an example, because you mentioned yield. So since inception, we launched V2 in May. So we have then, you can stake the stable coin, you get a yield, and you have an auto compounding version built by Jörn, another team. Also very decentralized. It performed 7%, just kind of the yield passing through. To give you just an idea, I think that's really comparable. And if you risk adjust it, I think it's really nice. And what you take is the technical risk, you have the Oracle risks, and the Yearn risk on top. But that's it. And with other things, you just have much more.
And it's definitely competitive there out. It's definitely a competitive solution in the market out there as well. And I really like what you mentioned earlier about how it's P2P. Essentially, it's very efficient. It reminds me a lot of what Aave, when they first started out with, they were essentially a decentralized P2P marketplace. But the real problem with that was actually scaling it, right? And naturally, when it comes down to stable coins, the question is always, how does the stable coin keep its peg? And at the same time, how do you also as well grow your stable coins? So maybe I ask this question in a way like for perhaps Michael now. What defends the peg of sovereign stable coins?
Yeah, the market forces and the users. We have built in this equilibrium that every side of the market has a strong incentive to bring the peg into order. So we have two-sided markets. You have the borrower, you put in collateral, your ETH, you're taking out 10,000 in bold, our stable coin. And then, of course, you not want to hold it. You want to buy something, so you sell it. So somebody needs to hold the stable coin, these 10,000, until you come back and pay back your loan. So you have these two players. And now, if in our case, if the stable coin is above peg, that has the effect that people won't redeem the borrower's position, so exchange the stablecoin for the underlying collateral. And because in liquidity, users can set their rate, they say, okay, there's no risk involved, I can lower my rate. And this means the stablecoin holders get less yield, because in liquidity, 100% of the yield is funneled through to the stablecoin holder. And they can do it until the yield is so low that I say, hey, I go to USDC or I go to FX because it gives me more yield. This means people are selling the stable coins, it goes below peg, and then you have like the stick, then people, stablecoin holders starting to redeem if the stablecoin is below peg. And then that's like the stick to borrow. Say, hey, if you don't pay more, Neil, you're still holding the loan, I'm going to redeem you. And then you say, okay, don't redeem me. I go up with the interest rate. And then you have again the feedback loop. The people say, now the yield is interesting, I'm not going to sell. So you see, that's really built in this mechanic that you have these incentives in a very direct way. Is it perfect? No, it fluctuates. And USDC has a better peg, but then you also introduce centralization. We could have had a better peg if we pegged it to USDT, but we didn't want that. So you have some volatility, but there's strong mechanism that the system can keep the peg. And the important thing with all our protocols is they are 200% or 150 or even more over collateralized. So it's also always important that it's always backed. It's not an algorithmic game like with Luna in that time, but you have these positions that are backing that, and you see it on chain. And as I said, with us, you can even redeem it. So if you're not sure and if you want to exit a stablecoin, you can anytime, say, hey, hello, I have one ball. Please give me the ETH, the underlying ETH. I mean, please do that with your greenback or with any other currency you might hold. Nobody will give you anything. So, these are the guarantees that such trustless protocols can build into code. And that's what I meant with, it's not only the risk, but these are, in my opinion, features you get with such kind of solutions.
And it's a good opportunity to showcase, like as we said in the beginning, it's not about saying this, like centralized stablecoins are the devil and decentralized are the only way to go. And in the beginning, we said there's a whole different kind of stablecoins. So Bold has a very interesting mechanism and has very limited centralized exposure, as you explained, Michael. With FXUSD on FX protocol, we decided to have a more dynamic peg keeping to make sure the peg is very, very tight, very similar to what the kind of peg you would expect on a even centralized stablecoins. So we have a different mechanism, and that's the idea: is that there is a different scope of trustlessness, and different mechanisms that prevents different benefits. And for instance, on FX, our main yield strategy takes both FXUSD and USDC so that these USDCs can help supporting the peg of FXUSD without having FXUSD exposed to USDC. And that strategy earns most of what the minter pays as fees and most of the collaterals yields as well. So it's also P2P. It's different because that yield strategy has exposure to USDC, but it also brings another benefit on the peg, which in both cases, the peg is close to 1. But on the FX side, it's just a little more dynamic and takes a shorter time to go back to peg. So it's all about what kind of I'm looking forward, but what kind of balance you want to find between what you're okay to accept as trust assumptions and what benefits are absolutely needed for you in the stable you use. But I think, so I will answer also your question about scalability, because that's one of the main points of the stablecoin trilemma. And I think we should also probably also go beyond the simple topic of stablecoins, because the ambition of the Trustless Force goes way beyond stablecoins. Even if we start with that first important mission we'll tell you about. So about scalability, obviously, on-chain stables, crypto-backed stablecoins are not as scalable as real-world assets. That's a thing. And it's okay. On FX, we have a pretty good capital efficiency thanks to a progressive liquidation mechanism that lets us have a higher LTV than many other CDPs. And I believe that on Liquidity, you achieve a pretty good LTV as well, if I recall correctly. But it's less capital efficient than something that's backed one-to-one, obviously. But what we need from decentralized and trustless stablecoin is to be capital efficient enough to meet the demand. It's not supposed to replace the money. It's not supposed to replace all the dollars in circulation, and it's totally fine. It just needs to be capital efficient enough to meet the demand. And as we grow the demand, the beautiful thing is that it will also grow the demand for the backing. And as we like to say, it's also like using trustless stablecoins pumps our bags. So, and I believe we achieved, like both our models and other models we work with, we are in touch with, have a capital, are capital efficient enough to meet the demand.
You know, that would be the MicroStrategy move for Ethereum. If all the users that using stablecoins on Ethereum would say, let's shift to trustless stablecoins. You know what would happen? We have 300 billion in stablecoins right now. All these assets are stored in traditional banks in treasuries. If everybody would decide we shift 100% to trustless stablecoins, we move 300 billion in liquidity on chain into the collateral that is backing these stablecoins in ETH, in wrapped Bitcoin, you know? So we would create crazy demand for these assets and pump all our banks. that would be really, you know, kind of the MicroStrategy move.
I vote yes. Yeah. I vote yes.
Yeah. Okay,
and you will see that's what we aim for a bit with our first mission.
Let's take a step back away from the sovereign stablecoins for a bit, and let's talk about the Trustless Force. So I can tell the two of you are incredibly passionate about decentralized stablecoins. First, I want to understand, and I want to understand a little bit about how and what got you guys together to essentially start the Trustless Force, and what is the overarching goal for you guys?
Yeah, so, you know, I'm not only passionate about trustless stablecoins, of course, that was the reason why I joined Liquidity, but I think much more important, that was why I like Ethereum, the ecosystem, what keeps me here, and probably that would also ask me, if we lose that, I think, okay, what are we going to do here? I can also work for another database. It loses its soul kind of and its purpose. So it's really passion for what has been built by all the core developers, by the underlying blockchain. And And with the Trustless Force, we're just saying, hey, if we have such a great blockchain, we should leverage that and also create applications that take advantage of it. Why build a trustless blockchain if we don't really use it? And what brought us together? Of course, we are in the space, and actually in Buenos Aires, I mean, we have both the same goal, and we do that also with Curve, and we want to do it with others. We need to educate the people because sometimes they don't understand the differences, or they don't understand the importance or these values. It's similar to privacy. You know, if you don't educate and say, hey, that's important, nothing happens. And we were doing that all on our own. And we just said, hey, we have less than 1% of the whole stablecoin market. What are we doing here saying this is better, this is different? No, we shouldn't compare us too much to each other. We need to grow the pie together. We need to get out of this 1%, and people just need to understand, okay, this needs more important. And that was a bit the thing that we said, let's make that bigger. Actually, there isn't really a big community or just a culture around these values. These people are scattered. So we just said, hey, it helps all of us and all these projects if you join forces and build a trustless force that is a loose community, an interest group. But as you see in politics everywhere, if you don't have the interest groups, kind of you become irrelevant. And I can quickly say that you have an idea. What are a bit the 4 ideas? Of course, we want to be a community, grow a community, and essentially bring the people together that have this passion. And sometimes they are demotivated because they think, I see only crazy people doing stupid stuff. What am I doing here? Kind of getting a bit at home and say, hey, there are like-minded people and we are still around. So that's the first thing.
Exactly.
Then the second is awareness and education. What we are doing here, where we can help us and really also support the projects. And that's the third thing, really also driving usage. By just using these protocols, you help them and you drive adoption. So that's another important point. And the fourth point is then really also building. And I mean, that's where we come from. So people that build protocols, but also tooling. But the important part is we really want to drive action. A lot of people talk about it and everybody says, yes, decentralization is great. But if there is not more in it, then we just don't move the needle. And that's why we then can touch, why we say we want to have mission. We want to really have these small steps where we can move the needle and kind of the mission we can then go into in that we just said, hey, we want to move 5% of stablecoins into trustless stablecoins. And we can go into that, why that makes sense, but just to have a bit the goal, and we can achieve a lot with that. So this, as a wrapper, how Trustless came together, what's a bit our goal and our mission and our passion. I don't know, Cyril, you want to add on that?
Yeah, I think you wrapped it up pretty well. As I said yesterday, like I've always been a little concerned seeing people fighting each other in the ecosystem, while the crypto ecosystem is already so small. And for me, it made a lot of sense to join forces as we share values, and this idea of growing the pie and educating of the interest of using trustless solutions makes a lot of sense. There's this first mission, which is very symbolic and which is very easy to understand, to shift this 5% to trustless stablecoins, and it goes way also beyond with educating, going to podcasts like today, and thanks again for having us, but also valorizing people who are not completely trustless or not completely Ethereum aligned or crypto backed or stuff like that, but that still care about these values, and also help them to make small steps towards more trustlessness. And I think it can go like, so we've been talking about DeFi because this is what we do, but it goes way beyond. For instance, I'll give you an example. I haven't told you about it, Michael, but I was using AI service today, which is really about privacy and stuff like that. And they made the choice to create models with T certifications so that you can make sure and be absolutely certain that your data is not retained. And like, for instance, this kind of initiative is great. They made the choice to not be like as easy as other stuff, but to build things that matters to protect privacy and to abstract trust from the design. Maybe I'm going like a bit off topic, but I don't know. I found it was a good example, and I should pitch these guys about the Trustless Force.
While we're on the topic of education and really getting your feet wet there, what do you think needs to change for the everyday users to start to trust and adopt sovereign stablecoins over USDT or USDC?
I think first they should just start to learn about the fact that there's a risk there and that there are alternatives accessible as well. And I'm very confident that as soon as people start just to learn about this, they will be curious about it. And they may also fall into the same rabbit hole we fell in and get passionate about it as well.
Yeah, so, and I think these sovereign stable coins is probably not what we first would recommend to our mothers. So it's totally okay to have USDC and USDT. It targets really more these crypto native users, we're in the Ethereum ecosystem. But then, yeah, it's really education, understanding the risk of the alternatives, the benefits you get. A lot of people like transparency, peace of mind, control. That's what they get with that. Yeah, so I think that's and then making it convenient and making it good products. At the end, for us, we all think we're giving the users good product. You get a good yield, you get a good leverage. So that makes a lot of sense. And I mean, but also one reason is we not only want to talk and educate, we go also to the communities to find contributors, people that are aligned and say, hey, yes, we need to make a difference and there are benefits. Okay, understood. We have sovereign stable coins. It's not just because they're sovereign. Hey, I have another risk profile. It can make sense to diversify my portfolio from a risk perspective, or I want some properties, some guarantees of this stable coin. It's not sensible, or I can redeem into ETH. I really like that. So showing the benefits. But also that's a Trustless Force seeing the benefits also for our ecosystem, that we say, hey, with that, yeah, we support the ecosystem. We have Ethereum dollars. At some point, we might need it. If you see how Trump uses every financial tool he has as a weapon, stuff and everything on, maybe it's a good idea to have your own dollar that you control. But also to say, as we said, if we have this mission, if we shift 5% into trustless stablecoins, this moves 5%, 15 billion in value onto Ethereum and creates demand for crypto. So hey, we as a community can help our bags too. It's not kind of that we need, and the step is so easy. It's not that you need to donate me $1,000. You just swap and do something else. It's not that big of a cost. So it's a small step for you, but I think a big one for the ecosystem. And the reason why we also came a bit here to the Nance community, because we feel it's very Ethereum aligned. So I hope there are some people that like the trustless way, and you're a great trustless DAO kind of a community, how you live that. So maybe people come in and say, hey, I like this idea, and we wanted also to have on the DAO side. I think we are totally open to that. We are it's a grassroots movement. But also to look into these aligned projects, can be a treasury. So the Rocket Pool team, for example, said, hey, our grants, we pay them out in bold because we are decentralized. We want to give that in a stablecoin that is backed also by our ETH, stuff like that. Or treasuries that say, hey, yes, we allocate 5-10% into these stablecoins and we set aside. And we want to honor these people, and also in our community say, hey, these are projects. They have their business, they have their mission, but they also care. Like you have also big companies that care about sustainability. We care about our values on Ethereum. So I think it would be really great and happy, DM us then on our Twitter, Trustless Force on X, to maybe come up with a proposal and say, hey, if the DAO community is open to that, and I'm not saying which stablecoin, but let's set the sign. Why not support also our own stablecoins? That would be a really cool sign. And that's what we try to spearhead, again, because it's our passion. We want to see these things, because if you think these things don't happen and don't matter, honestly, then I also think the ecosystem loses attractiveness to a lot of people, bright people.
Exactly, and any kind of contribution, whether it's shifting to trustless stablecoins or doing a step towards more trustlessness in the product or onboarding, I don't know, a KOL on the topic, or any form of contribution is something we want to value, and we want to make people proud of contributing to trustlessness on Ethereum. And I can tell you a little story. I was talking to a guy I knew yesterday in my co-working space. He's been around the ecosystem, not as a builder, but mostly as a user, and so. And he told me, like, in the first days in crypto, he was just thinking about one thing, was making money. And now that I guess he's comfortable enough, he starts worrying about all these values and trustlessness. My point is that right now, many people are not aware of this. They don't even care, because all they want to do is 100x on a meme coin, you know? And so USDT is totally fine. But at some point, it's not going to make them happy, you know? And actually caring for things that matter, such as trustlessness, because it brings freedom, basically, and freedom matters a lot, especially in 2026 world. Well, it brings sense, and sense brings happiness.
Amazing. I would like to ask, you know, how are sovereign stablecoins going to essentially play out in 2026, when the narratives in the industry right now, they're shaping to become they're shaping to favor tokenized stocks, RWAs, and at the same time we have also blockchains like Plasma and USDC's Arc chain coming along. Where does sovereign stablecoin find its place here in this year?
Again, I go back to my picture. You know, I think all this tokenization, bringing equities on chain, everything fine, makes a lot of sense, but will be highly regulated. You know, because it's the same as in the traditional financial world, but now you have it on chain. It's great that you can use it as a collateral, but you have the modularity. And then you will have the sovereign ones, the fully decentralized ones. I still hope and believe that this will flourish too, especially because you see now with regulation, you need to be that. Otherwise, you are in this gray area. And in this gray area, honestly, I think less and less projects can survive. Either they say, okay, you're managing client assets, you have operations, you take custody, you place these carry trades, then you better get a license. Or you build it in a way that really guarantees that there is no intermediary and the customer is treated kind of with this built-in protection, and maybe has the technical risk. Okay, I really think you only have will more and more only have these two worlds. I still think this will be more a niche. I hope to see more innovation. There wasn't so much innovation, and people also understanding and valuing more these opportunities. Now we see, you know, we had the conversation, everybody's buying gold, you know, now the gold, they're moving it out from the US. Guess where our stable coins are custodied, you know? So if people say, hey, I don't want a stable coin where Trump can say, I don't like you, and that's why your treasury, you need to come and get your treasury, come to the US. They maybe say, hey, I really like financial freedom. I want a sovereign dollar that I'm in control, not a specific jurisdiction or somebody, that we will see some upwind for that. And I hope for me, it only can happen on Ethereum, because it's the only credible layer to host that. So that's a bit my vision. It will never stick up. That will be always big. But right now, it's almost forgotten. So I hope, like we had the DeFi summer, we will have the sovereign stablecoin or the trustless summer soon. And mainly maybe driven, you know, by geopolitical macro stuff. I could imagine.
Yeah, I wouldn't be surprised. I think, yeah, our mission is to still be around and known enough so that people can rely on trustless stablecoin whenever they need to, because they will at some point. I don't want to be like dramatic, but at some point, most trusted solutions will disappoint.
Gentlemen, it has been a great conversation. We are approaching towards the end of the show, so I would like to close the interview with two more questions. The first question would be, in let's say one paragraph or less, if you could let the audience walk away with one takeaway today, what would it be?
Yeah, explore the trustless world, put your toes into the water. If you are kind of in the Ethereum ecosystem, I think you should care and value that. And at least I hope you understand that. And if you support it, make your shift, being it a stablecoin or another way.
And join us, join the Trustless Force on X to start with. Share your ideas, share the projects that matters to you, share the values that matters to you. And if you think of any way we could bring some light on what you're doing, just reach out.
What are the things which you as a Trustless Force want to work on right now with the community on Ethereum?
Yeah, so first, we have we just started the trustless movement. So honestly, getting organized, not overwhelmed, and getting contributors, because we are fully in projects. We're doing that really on the side. So first, getting with community, people that support that are passionate, then moving the stablecoin mission, then shedding light on other great builders that do trustless stuff. I would love, for example, to have L2Beat in there, and just they're also doing incredible work, or the DeFi collective, shedding light and honor those people that work on that. That would be the next. And hopefully then somebody comes and says, hey, I have an idea for a mission. I want to drive that because it's important for trustlessness. And then hopefully, as I said, it's grassroots. They would run with that.
Exactly. Super. Any form of contribution is welcomed. Anyone that has even just visibility on socials that just want to spread the word around about the Trustless Force, then it's a way of contributing. You don't have to shift your stables if you don't want to shift your stables. You can also just bring light to the initiative, just like you do, Liew. By the way, thank you.
Yeah, I wanted to say thank you. You're kind of almost one of the first contributors, because you said, hey guys, we like what you do and we want to share that. That's also a big contribution. And thank you to you and then the Nance community of kind of having us and having us talk about our passion. I hope it wasn't overwhelming and you share a bit these thoughts.
Nah, it's okay. I mean, I'm just the guy who asks questions, and I'm more than happy to have you guys on the show. And really, thank you for coming on and sharing that passion with us and the audience here. So, everyone, do follow the Trustless Force on Twitter. Do get involved with them. You can reach out to Michael or Cyril on the Trustless Force, or onto their Twitter profiles on FX Protocol, or even Liquidity as well. And even after today, I think that I am now a new believer that sovereign stablecoins and decentralized stablecoins are an underrated gem in DeFi. And I definitely hope to see more use cases in the near future.
Great, all right. Well said. Good Nothing words. To add.
Yeah, exactly.
Yeah. All right. Thank you, everyone. Thank you, guys. This has been this episode of the AthenaX Livestream. So once again, thank you so much for Cyril and Michael to join us. And I will see you at the next episode. Bye-bye.
Thank you. Bye.
Bye-bye.